Very good morning and wishing you a fantastic Friday. Welcome to today's episode. Three things that we talk about: strong ADP and Jobless data, index of services activity highest in 24 years, and earnings from Broadcom. Stocks closed down on Thursday with technology shares underperforming on upbeat employment data and the Federal Reserve's decision to start selling the corporate bonds it bought during the pandemic last year. The three major indexes all fell. The Dow was down 0.07%, the S&P was down 0.3%, while the Nasdaq was down about 1%. Figures on hiring in the private sector from ADP and data on initial claims for unemployment benefits both came in strong as investors await the government's key jobs data on Friday, which is today. ADP said the private sector added about 978,000 jobs, while initial claims for unemployment benefits fell to 385,000, moving below 400,000 for the first time since the start of the pandemic. Tax news during the day, which helped bear some of the losses, was that Joe Biden pitched to Republicans the idea of a 15% minimum corporate tax in a major concession to win support for a bipartisan infrastructure bill. The offer sets aside the White House proposal to raise the top rate to 28% from 21%, but still includes strengthened IRS enforcement efforts on corporations and wealthy earners. We spoke about the Fed dialing down on the corporate bond and ETF purchases yesterday. That also had an impact on the price action yesterday. So the Fed began selling about 13 billion of corporate bonds, a sign that it's becoming less accommodative. The central bank had bought bonds, remember, to help keep corporate borrowing costs down so companies could access capital during the pandemic. In the broader market, the rotation continued. The shift from high-flying growth stories into value plays. In autos, for instance, Tesla fell about 5.3%, while traditional automakers who are working overtime to build their own electric vehicle capabilities rallied. Ford ended the day up 7.2% and General Motors also rose 6.4%. In the bond market, the yield on the 10-year Treasury ticked up to about 1.62 from 1.59. Gold slipped about 1.9% to 1871, its largest one-day drop since Feb of 26th. US crude fell as well, but 0.1% to about 68.81. We got some fantastic services activity data yesterday. The Institute of Supply Management on Thursday reported that its index for services activity rose to 64 in May from about 62.7 in April, registering the highest level in its 24-year history. So this is a PMI read, so anything above 50 indicates expansion. The details of the report were uniformly strong. All 18 of the services industries surveyed by ISM reported growth, and underlying indexes on the current pace of business, orders and employment were all solid. It also was clear that the services industries are having a hard time keeping up with orders backlog piling up, supplier delivery slowing, and labor and commodities often hard to secure. The outlook for services can only get better, considering that the share of US adults who are fully vaccinated against the virus rose to 51% at the end of last month from about 39% at the end of April. Also in May, the CDC said that fully vaccinated people need not wear masks in most settings, leading states to relax restrictions, while warmer weather made COVID-19 workarounds like outdoor dining easier. That in turn will make people feel even more comfortable going out, heading back into office, getting haircuts, gathering with friends and family and taking trips. The demand service sector businesses are now experiencing will get even more pitched and the race to secure materials and labor more heated. All parties end, but the service sector one is just getting started is what the general feel is from the market. And remember, services is a big chunk of the US economy, I think contributing about 70% of their overall economy itself. Lastly, wanted to touch upon earnings from Broadcom. Powered by its chip business, Broadcom disclosed higher revenue than expected and issued a bullish forecast when it reported its quarterly results late Thursday. As the chip shortage continues to plague supply chains around the world, investors have high expectations for semiconductor businesses when they report earnings. A company is expected to outperform its own guidance and issue an upbeat forecast as well. And even checking both those boxes doesn't always translate to an upside for a stock. That appeared to be the case with Broadcom. The shares were flat in extended trading. Stock had fallen about 1.9% in regular trading. Broadcom reported second quarter net income of about 1.49 billion, which amounts to about $3.30 a share, compared with the 563 million and a 1.17 a share in a year earlier period. Due to strength in demand for semiconductors across our multiple end markets, we delivered 20% year-over-year increase in the semiconductor revenue, is what the chief executive said. Our third quarter outlook projects this year-on-year growth to sustain, and we continue to see strong demand from service providers and hypercloud, is what he added as well. Better than expected revenue from chip business appeared to drive Broadcom's overall top-line results. The company reported semiconductor revenue rose 20% to about 4.82 billion from a year ago, and infrastructure software revenue ticked up as well, 4% to about 1.79 billion. So overall strong numbers and results from Broadcom, though the stock was much more muted in its reaction to these numbers. That is the update. Stay safe and healthy. Have a lovely weekend ahead, and I'll speak to you on Monday.